morning, everybody. It is now 10 a.m. and we are going to go ahead and begin our Homeowner Association Board Member Certification class. Once again, my name is Leslie Pergossum. I'm the Business Development Manager for Vesta Property Services. Everyone's, just as kind of a short housekeeping, everyone's video has been turned off. Everyone is on mute. We have a Q&A button at the bottom. If everyone could, if you've got any questions, go ahead and type it there. Most of your questions will be most likely addressed during the presentation this morning, but all of your questions will be addressed at the very end of this morning's webinar. At this time, I will go ahead and turn it over to our Melbourne office General Manager, Brenda Grochowski.
Good morning, and thank you for joining. My name is Brenda Grochowski. I'm the Operations Manager for the Melbourne branch of Vesta Property Services. We have 17 locations throughout the state of Florida and serve over 250,000 residents and owners. And I'm happy to be joining with John Carrigan today. He is an attorney of Ross, Earle, Bonan Ensor, PA. They're located in Stuart and in Vero Beach. And he is a shareholder. He's board certified in condominium, HOA, and plan development law. And their firm represents over 600 condominiums and homeowners associations up and down the East Coast. And he is concentrating his practice on community association representation since 2009. So John, thank you for joining us today and sharing part of your morning with us so that we can, give these attendees their board certification class.
Wonderful. Thank you for having me, and thank you everyone for attending. When Brenda mentioned this to me, I had wondered how many people would actually need a board certification course at the August of 2021. Turns out we have 52 people aboard, so very excited to see that much participation. It is a very difficult volunteer job that you all do, and sometimes it goes unappreciated. So the fact that you're willing to take time out of your day and become educated to better serve your community is certainly something that is due respect. So with that being said, my name is John Carrigan with the law firm of Ross, Earle, Bonan Ensor. I want to thank Vesta Property Services, Brenda and Leslie, for inviting me to appear today. We are a DBPR certified education provider. So at the end of the presentation, there will be a list procured by Vesta Property that will identify the board members who attended. And my assistant, Madeline, will be emailing you your certificates. Typically takes us about a week, so look for your email early next week to get a copy of the certificates. And there'll be a slide on this, but certainly put it in your association's official records. So with that being said, I'm going to try to, I see the PowerPoint presentations up. I'm going to try to share my screen so that I can control the PowerPoint presentation here, Brenda. And that should, we'll see if I can do it right.
Yes, you should be able to share. There you go.
Gotcha. All right, can everybody see that?
Yes.
I'm asking the webinar, but I appreciate it. Okay. So before we go ahead and get into it, this is the HOA board member certification course. So if you're a part of a condominium or cooperative or mobile home park, not the board certification course for you. Certainly welcome to stay and attend, but you will not get the appropriate certification that you need for today. But if you're part of an HOA, whether that's single family homes, multifamily dwellings, or so forth, villas, townhomes, you are at the right place. So with that being said, why are you here? 720-3033 subsection 1 that came into effect a few years ago said that we want all new board members to be educated on the basics of association operations. And so there's two ways to do that. Option number one is to attend an educational seminar provided by a DBPR provider, which we are, or the alternative is to self-certify. I always recommend to clients attend the educational course, whether it's my firm or another firm, because you will learn all the little nuggets that you need to know as far as becoming an effective board member. But in the event there is not an educational course, there is this other option of submitting a written certification, and it's on the DBPR website. If you go to Google and search DBPR HOA certification, one of the top 3 results there, there's a form you fill out, and you have to attest on this form that you have read the governing documents and you will execute and fully, faithfully comply with those governing documents in accordance with the law. You then file that self-certification form in the official records, and you have satisfied this criteria. Very important, this provision here that says a director who fails to comply is suspended from the board until he or she complies. Number one, because you can self-certify, there should be no excuse as to why you don't complete the self-certification form. But in the event we run into a situation where the board member didn't know, that's okay. That doesn't invalidate all the actions the board took. If we get 6 months into a new directorship and that member did not file a self-certification or attend an educational course, the actions that were done up until the date they discovered that they failed to comply are still good. The statute is very, very clear on that. But immediately when we find out that's an issue, we need to sit down with the governing documents, we need to review the statutes, and we need to execute the self-certification form, and therefore there should not be a suspension.
John.
So, yep.
Oh, sorry, I'm sorry for interrupting. The slides, I don't know if you're forwarding them or making them move forward, but we're still stuck on the first slide.
Oh, are you? Okay,
Yes.
well, let's see here. New share, screen 3. How about that? Is that better?
Yes, thank you so
Perfect.
much.
Okay, well, that's what happens when you have 3 screens. I get confused. So we're all looking at screen 3. So this is the statutory requirement, 720.3033 subsection 1. And when we go through today's presentation, the categories that we're really going to look at are the most commonly questions that I get asked, either working with property managers and they say, hey, my client's always calling me on this, or I get asked directly because it involves legal issues. But those really are budgets. How do we fund the association and what are the components of that? That is something that your management company can certainly go ahead and walk you through. Election, how do we conduct elections for the HOA? The good news is you're all here. So you've been elected, but there will be an upcoming election. So we'll talk about those. We'll talk about official records and official records requests and the pitfalls that can come with those. And we'll talk about enforcement. What happens if somebody does not follow through with their obligations to, take care of the exterior of their home, bring their garbage cans in, are a nuisance in the community? What do we do in those circumstances? And then lastly, I could give its own presentation on this, but a statutory update. I have 2 or 3 slides. There's a pretty substantive bill that went through this summer that updated a lot in the HOA context. I will touch on a few of the probably most talked about amendments, but certainly you can contact Vesta or you can contact my assistant, Madeline. We do prepare a full, what we call Reb Law review that we provide to our clients, which has all of the statutory updates on there. So moving to the next slide. Can everybody see the budgets now?
Yeah, we're on the slide that says
Perfect.
HOA budget 720.
You got it. Okay. So I always start off with budgets because they are probably the most important thing because it's how you fund the association's operations, but it's mundane, right? It's a lot of accounting and designations as to the categories, specific income and expenses. So we'll get this out of the way. If y'all can stay awake through this portion of it, I promise the rest of the presentation will be much, much more exciting. So budgets are under 720.303 subsection 6. All of the association or HOA restrictions are and laws are going to be under Chapter 720 Florida statutes or Chapter 617 Florida statutes. That's the not-for-profit corporation statute. So anytime that I have a client that has a question come up, I always say first in the HOA context, look to your governing documents. What do your governing documents say? That's your declaration, that's your bylaws, that's your articles of incorporation, that's your rules and regulations. Do they address the topic that your inquiry surrounds? Then, if that doesn't answer it, let's also consider what does the statute say. Now, sometimes in the HOA context, those supersede, there's statutes that supersede what your governing documents say, but always start with your governing documents. Then go to the statute, see if that answers your question. And if that doesn't, talk to your manager. The manager 90% of the time can answer your question. And if we don't get through it at that point in time, that's when you pick up the phone and call the attorney. So kind of go through that process as we analyze stuff. With budgets, mostly going to go ahead and be your manager. So budgets are broken down into really two components. You're going to have your operating budget to pay for day-to-day expenditures. That would be management company fees, landscaping company fees, utilities, office supplies, attorney expenses, and those types of items. They must reflect the estimated revenues and expenses for the year and the estimated surplus or deficit at the end of the current year. And then they need to set out all fees or charges paid for by the association for any recreational amenities. So you'll have a line item for all of those different categories. Typically, they contain what we spent in 2020, and then it'll say for 2021, here's our estimate of what we're going to spend. And that estimate is the budgetary amount for the upcoming year once passed. We would now be 2021 coming this fall. What have we spent? And then 2022, what do we estimate to spend? Very important. The board members need to realize that a budget is an estimate. It is not set in stone. So if we categorize X number of dollars for landscaping and we have a hurricane come through and you got to hire the landscapers to come on site and pick up a bunch of, palm leaves and everything else, an extra $500 or $600, that's okay. We don't have to go ahead and go back and mend the budget. But that $500 has to come from somewhere else in the operating. So just consider that it is an estimate. It is not set in stone, but the association should, at the end of the day, one, try to make the year-end actual expenditures match up to the estimated budget as much as possible. And number two, not carry over too much of a surplus into the following year, or in the alternative, run too much of a deficit. Budget meetings. So this is where you want to look to your bylaws or your articles of incorporation to determine how much notice of a budget meeting, the meeting of the board of directors at which a budget will be considered, has to be given to the members. If it does not say so in your bylaws or articles of incorporation, the statute says it's 48 hours notice. I always recommend to clients, and then you'll see the statutory floor, right? And then what is the best practice? The best practice is prior to your budget meeting to send out notice to all your members. I recommend at least 14 days in advance, although you can do as little as 48 hours, with a copy saying, hey guys, we're having a budget meeting on this date, and enclosing in that notice a copy of the budget. That way, the board has done everything they can to make sure the members understand what the expenditures are for the upcoming meeting, and if they have any questions or concerns, that there's time for them to, either attend the meeting in person, or if it's via Zoom, to log in and attend the meeting and ask those questions and have those answered. At the budget meeting, it is still a board decision. The membership can provide input, but the board makes the decision at the end of the day. This also provides that if the association doesn't send out a copy of the budget with the notice, which is something that I recommend, that if a member subsequently requests a copy, you do have 10 business days to provide it. My clients typically don't have to worry about that because they send out a copy of the budget ahead of time. But if you do not, if you only provide notice of the meeting at which the budget will be considered and don't provide a copy of the budget, then this 10-day deadline does apply. The other component of association budgeting is we have the operating is HOA reserves. So this is money that we put away on a yearly basis to go ahead and account for long-term deferred maintenance items, so things that aren't addressed every year, or long-term capital improvements to the association. So these would be things if you have a clubhouse. At some point, that clubhouse is going to require repainting. At some point, that clubhouse is going to require a new roof. If you have a pool, at some point, it's going to require resurfacing. If you have pool equipment, at some point, that is going to have to be replaced. So what I recommend to clients is they take a look and say, what are our long-term maintenance obligations, things that are not fixed every year that we need to go ahead and account for? One methodology of doing that is to simply have a board member go out and identify what those are. Rely on your management company. They can look at your association and probably within a few days be able to tell you, here's the things you really need to put in your reserve accounts. But you can also have a reserve study done. That's where you pay a few $1,000s to have a company that specializes in this do this for you. So those are the kind of the methodology that we look at when establishing what type of reserves are there and how much money should we be putting away. So in addition to the annual operating expenses, the budget may, and we'll get into why that's underlined, include reserve accounts for capital expenditures and deferred maintenance for which the association is responsible. So we talked about HOA reserves. The next slides will go over two different types of reserves. In the HOA context, there can be mandatory reserves or there can be voluntary reserves. If you have mandatory reserves, those initially established by the developer prior to turnover, or those imputed or required by membership vote, so the members vote to establish reserves, those items have to be reserved and have to appear in the budget every year. And if you do not want to fund those reserves, you have to go to the membership and ask for permission to either partially fund or waive that. But mandatory reserves are something that has to be in the budget every year. It's computed by a means of a formula based on the estimated remaining useful life and estimated replacement costs or the deferred maintenance expense of each item, which may be adjusted annually. That's a lot of accountants that went into putting that statutory language together. In a few slides, there'll be an example and we'll walk through the line items and how we calculate reserves. Under mandatory reserves, so established by the developer or an alternative imputed by the membership, they can be straight line reserves. And the straight line funding is you reserve a separate line item for each individual deferred maintenance item. So the pool resurfacing money would be calculated in the budget every year, and we would put money away specifically for pool resurfacing. The clubhouse roof would be different, paving would be different, repainting would be different. So that's how straight line funding works. It is the most simplistic way of reserving, but it does lack flexibility when it comes to, oh, something's come due. Have we reserved enough at this point in time to avoid a special assessment? The alternative to straight line reserves is pooled reserves, which I'll get in a moment. If the association maintains separate reserve accounts for each of the required assets, the amount of the contribution to each of the reserve accounts is the sum of the following two calculations. Again, this is getting into the breakdown of how the accounting works. There will be an example that explains this and illustrates it better. Straight line funding is the total amount necessary to bring a negative component balance back to zero, and the total estimated deferred maintenance expense or estimated replacement cost of the reserve component, less the estimated balance of the reserve component as the beginning of the period the budget will be in effect. And then the remainder, if greater than zero, shall be divided by the estimated remaining useful life of the component. Trust me, there'll be an example. So we get to this. This is a straight line reserve that you would typically see in an HOA budget. Let's just talk about the first line there, roof replacement. So if you look at the first I guess it's the second column over, it talks about the estimated total useful life of the roof. So that is how long, if brand new, would the roof last? And in this estimate, they either went out and had a reserve study done, or they had a roof contractor come out and say, the roof on your clubhouse is estimated a 12-year useful life, right? If you go to the third column over, that is, well, how many years into the 12 years are we? In this example, the estimated remaining useful life of the clubhouse roof is 1 year, meaning that we're 11 years into the 12-year lifespan of this roof. The fourth column over is the estimated cost for deferred maintenance. How much is it going to cost to replace the roof when we need to go ahead and do it? In this case, either a reserve study or a contractor's estimate reflects that the clubhouse roof replacement would have been $95,000. And then the fifth column over is the estimated fund balance as of the end of the year. So in this example, it says the roof is going to cost $95,000 to fix, and we now have $87,000 because we've been collecting for 11 years towards the $95,000 we need to replace the roof. So when we get to the very last column, which is the funding required in the proposed budget, this is how much is actually being paid this year from this year's budget to account for the roof replacement, it would be $8,000. That is the difference between the $87,000 cash on hand and the $95,000 that are needed. So the question I typically get from clients is, John, we did a calculation, and if we did it right, the 12 years is up. In the roof for the clubhouse, it's in fine shape. Doesn't require any repairs. Do we have to tear it off? No, you do not. That's the good news. So when we get to next year's budget, so long as the roof did not require any work this year, we would have $95,000 on hand, and we would simply keep that $95,000 on hand until the roof required replacement. So for the following year after this example, we wouldn't have to put any money away for the clubhouse roof replacement. Of course, when that comes due, that's when we take the $95,000 out and we go ahead and allocate that money to go to pay for the specific roof item. You can look through, and I forgot to mention, because if anybody at the end of the day would like a copy of this PowerPoint presentation, happy to provide it to you. You might want to mark down slide number 13, a good example of what to look for when you talk about budgets. Of course, if you have a management company such as Vesta, they have all these forms for you. So HOA pooled reserves. So we talked about mandatory straight line reserves, which was this. Pooled reserves are a little different. What pooled reserves do is allow the board the flexibility to go ahead and calculate the individual amounts to go in for each reserve component, but it's into a pool. So in the prior example, let's say that I am on the pavement resurfacing. I have 18 years of useful life, 7 years estimated remaining. It's $55,000 to repair, and I only have $30,000 on hand. Well, what happens if the roadway has to be done today? I don't have the $55,000 to go ahead and do the project. John, what do I do? Well, what I would recommend is option one is you can levy a special assessment to cover the difference between the $55,000 and the $30,000. And then you'll have enough money to undertake the road resurfacing this year. The alternative is to have a membership meeting, and a majority of those members present at such meeting can vote to move money from one of these other straight line reserves, roof, painting, elevator repair and modernization, right, into the road resurfacing, give you permission to move that money, and then you'll have the $55,000 to undertake the roadway repair. Both of those options are difficult decisions to make. What a pooled reserve allows you to do is you do calculate the reserves in the same methodology, but at the end of the day, it all goes into the same pool. So if one of the reserve components, a roof, a roadway, an elevator, comes due before the end of the remaining useful life. The roof only lasts 10 years, not 12 years. It requires replacement. We have a hurricane and there's a shortfall in insurance funds and we need the money. Well, in a pooled reserve methodology, you can take the money from the collective pool to pay for all of it. So if we go back to this prior example, this shows that there are $206,240 on hand. If we were using the pooled reserve methodology, you have $206,000 sitting there. So if the pavement resurfacing comes due early and I need $55,000 of that 206, under a pooled methodology, the board alone can pull that money out and pay for the road resurfacing, even though it hasn't gone throughout its entire useful life, if it has to be done today. So it gives the association flexibility to have immediate access to funds if a deferred maintenance item comes due early. The only downfall to pooled reserves that I've observed is you have to typically have a CPA or accountant that works on the methodology to calculate the pool. And then if you do pull money out before the remaining useful life, you have to recalibrate everything in the following year's budget. So if I take the $55,000 out early for the roadway resurfacing and I only have $30,000 allocated to it in a pool, I have to make up that difference the following budget year. I have to work that back in. So it does require an accountant. Typically, it's a few $1,000s extra per year, but in my thought is that it's well worth the expense to have the flexibility. The last thing we want is when you have a major hurricane event, a fire, so forth, either you have to levy a special assessment, which takes time because you have to have a vote and then people have to pay, or in the alternative, you have to have a membership meeting, ask for permission to move money, both of which are pretty inflexible. So when we talk about mandatory reserves, I mentioned earlier that they have to be part of the budget. The board alone cannot vote to reduce or waive those reserves. Rather, you have to go to the membership if you have mandatory reserves, whether straight line or pooled, and ask to go ahead and collect less. It requires a majority vote at a membership meeting at which a quorum is established. So if my quorum is 30%, then I have to get a majority of the 30% that's there. Members can provide for no reserves, so we can totally waive the reserves, or we can agree to partially fund. So in the prior example, this shows that there's $36,000 that are being allocated towards reserve for that particular year. Let's make it easy math. Let's say there's 36 homes in that community. That's $1,000 per unit for reserves for that year, to $250 per quarter. The association could say, we don't want to put that money away this year, and they could request the membership only put $150 per unit per quarter away. Again, if a majority vote at a meeting at which a quorum is present votes, then the association can only partially fund or completely waive reserves. Proxies can be used, but they have to have a statutory disclaimer on them that basically says, you understand the consequences of partially funding or waiving reserves. You may be subject to a special assessment. And as to mandatory reserves, if the association for some reason wanted to eliminate them, it's a majority vote of the total voting interest. So 36 homes, do some quick math, I think that would require 19 out of the 36. I think that's right. So 50% plus one to go ahead and eliminate the mandatory reserves. So that goes through mandatory reserves, again, established by the developer or implemented by the membership. The other one, which we see for most HOA clients, is voluntary reserves. So these are reserves that are not set forth in your governing documents, were not implemented by the developer. The membership has never voted to impose mandatory reserves, but there's still reserves on your budget, and that's a good thing. But these reserve accounts are fully controlled by the board. So from year to year, they may be on there, they may not be on there. I always recommend they do appear on there because nobody likes special assessments, but they're voluntary, so the board controls them. The formulation of how voluntary reserves work is at the board's discretion. I do recommend that you follow either a pooled or straight line method because I think it's easier for the membership to understand, but there's no requirement that you do so. And if you do have voluntary reserves or no reserves, you do have to put special disclaimers on all of your financial statements that reflect that you have voluntary reserves. And that looks like this. So this will appear on the year-end annual audit, and it needs to appear on the budget. So a budget is only voluntary reserves, wording slightly different, but again, the crux of what the disclaimer is relates to the fact that they're voluntary and you may be subject to a special assessment. I will point out that it's been my experience in the past few years, lenders have started requesting a copy of the association's latest budget as a condition of approving mortgages in communities. And I found that if you have mandatory reserves that are funded, becomes much easier to go ahead and obtain funding for an association. To proceed with a loan for the purchase of a home in your community. Sometimes if you get into situations where you have no reserves or voluntary reserves, you get supplemental questions from the lender, makes homes less marketable in your community because people can have difficulty getting mortgages. Hence why I recommend have reserves. Alternative use of HOA mandatory reserve funds. Reserve funds and any interest accruing thereon must be used only for the reserve expenditure unless their use for a purpose is approved in advance by a majority vote of those members at a meeting which quorum is present. That goes back to what I was speaking about. What happens if something comes due early? You got to go to the members or you got to levy a special assessment, neither of which is a good option. Hence why we recommend that you have a pooled reserve in this case. So with that being said, we will transition away from the mundane topic of budgets, reserves, operating, and so forth, and go into HOA elections. Brenda and Leslie, if you don't mind, I'm going to take questions at the end. I don't know if you mentioned that. Everybody knows there's a Q&A box, so we'll come back to those. So don't think I'm not paying attention to you, but I think it's important to get through the presentation, let those people that don't want to stick around leave, and then we'll get to the Q&A session. So HOA elections, how did you get here? Well, hopefully you had a flawless election. Hopefully it was overwhelming. Vote in your favor. Congratulations. You now have, in my opinion, one of the hardest and hardest voluntary jobs out there. Very rare that we go ahead and run into issues in life where you're not compensated, but people take time out of their day to volunteer here, and you have to hope that people go ahead and respect the position you're in. So you're here. Hopefully the next few slides which talks about ineligibility run for the board, none of them apply to you. If they do apply to you, you should have contacted your association's legal counsel to work through the issues. So HOA elections, important. You want to look to the association's governing documents first. 720-306 subsection 8 and 9, which deal with HOA elections, are for the most part a gap filler statutory provision, meaning that it starts out by saying, if your bylaws provide otherwise, look to your bylaws. And if they don't provide, here's what the law is. So you always want to look at, well, how do my bylaws dictate how I conduct my election? And if there's something missing, can you vote by proxy? Do we have a double envelope system, something like that? That's when we can look to the statute, but start with your bylaws. So association elections have to be done within the association's governing documents or in accordance with the association's governing documents. And all members, but for on the next slide, are eligible to serve on the board of directors and may nominate themselves from the floor of the meeting. There is a caveat to that. If you allow advance nominations, advance of the annual meeting and election, that would be something specifically in your bylaws, then you do not have to allow nominations from the floor. A question I get every year, so look to your bylaws. If it states you have to submit your intent to run at least X number of days in advance of the meeting, then you do not have to allow nominations from the floor. But if there is no provision like that in your bylaws, then the statute requires you have to allow nominations from the floor at the annual meeting. That is where somebody stands up at the annual meeting, raises their hand and say, I hereby nominate John Carrigan, myself, to be a candidate for the board of directors. That's a nomination from the floor. Typically, clients attempt to ascertain who those people will be ahead of time, but you have to allow nominations from the floor if you don't allow or don't mandate advance nominations in the bylaws. Who's not eligible to serve on the board of directors? So the default is everyone is, but these people are not. Number one is a member who is delinquent in any monetary sums owed to the association on the last day that he or she could be nominated as a candidate for the election. So if you allow nominations from the floor, that means that the manager or the treasurer should have a delinquency list at the annual meeting. And if somebody nominates themselves to be a candidate, we need to verify that they are current on all monetary obligations owed to the association. I ran into a situation this past year where somebody was delinquent because they didn't pay the $15 for their RFID tag to access through the gate. And we had to deem them ineligible to run for the board of directors. What a silly, silly issue, right? So if you're going to be a candidate, probably call the manager, get confirmation you're current on everything so there's no issues when you do nominate yourself. The other one is a convicted felon whose rights have not been restored for 5 years. The question I typically go ahead and get from clients is, does this mean we can run a background check on any candidate? No, it does not. But if there is evidence to indicate that they do have a felony conviction on their record, call the attorney and have them research the issue and vet the issue for you. You can go through that. But this is not a permission from the legislature to start running background checks on all board members. If the governing document of the association permit candidates to be nominated in advance of the meeting, then the association is not required to allow nominations from the floor. So what I spoke about earlier, this can be done in several ways. One, if you have a nominating committee, kind of an archaic committee that was implemented in communities developed in the 70s and 80s, that there would be an independent committee who would choose who would be the best candidates for the board. We still see it in some of our clients, but most of the time those have been eliminated. That's done at a special meeting in advance of the annual election, where the members go, the nominating committee selects who's going to be on the ballot. Look to your bylaws. If it talks about a nominating committee, talk to your manager, talk to counsel. The one we see most often is a provision in the bylaws that says that if you want to run for the board, you have to put your name in the hat at least 14 days advance of the meeting, or maybe 30 days advance of the meeting. But that way, the association knows who is going to appear on the ballot. Again, your bylaws will specifically provide that. And if you want to go ahead, if you don't have that in your bylaws or articles, and you want to have advanced nominations, you have to do an amendment. You can't do it by rule. You can't do it by board policy. We have to amend the bylaws or the articles, typically the bylaws, to authorize advanced nominations. HOA elections, part 3, unless otherwise prohibited by the governing documents, members may vote in elections in person or by proxy. So an in-person would be you show up at the annual meeting and they give you the ballot to fill out, and you put in who you want and you check the right boxes and you put it in the ballot box. Easy enough. A proxy would be a limited proxy. So if I can't attend the annual meeting, I can fill out a limited proxy. It's a statutory form, so very important the manager or legal counsel review the form that's sent out to everyone. But I fill out the form and say, in lieu of my presence at the meeting, I hereby nominate either a person I want to go for me, or typically by default, the secretary of the association, to cast a ballot in accordance with the people below. And so what the secretary does is they show up at the meeting and they turn in that limited proxy, and that limited proxy is equivalent to your physical presence at the meeting, and it's a vote for the candidates that you checked on that limited proxy. And the association may also allow somewhat unusual in the HOA context, a secret absentee ballot. There'll be a slide on this in the next one. It's essentially the condo type of ballot where you get the outer envelope and the inner envelope. And the advantage of this is that it maintains the secrecy of the ballot. So when we talk about use of limited proxies, that's election material, that's part of the official records. People can make a records request and go back and find out, at least by virtue of the limited proxies, who voted for who, right? So the absentee or secret ballot provides secrecy because the limited proxy during the annual meeting is separated from the ballot completed by the individual. That can only be done, you can only use the secret absentee ballot if your bylaws or articles permit such. So again, if it's not in there, then you're stuck with the ballot in limited proxy. If it allows for secret ballot, then you can implement the following slide. So the absentee or secret ballot is a double envelope system. So the mailing that goes out to the membership contains a large letter size outer envelope. And on the outside of that envelope, when you return it, you'll sign your name, you'll indicate your property address. And that is in essence your limited proxy, right? And then inside that outer envelope, there'll be the typical mailing envelope, which will contain no markings. And that contains your actual ballot, right? And so when we get to the annual meeting, you take the outer envelopes and we go across a checklist and we verify, okay, John Carrigan at this address, he's turned in his outer envelope, check. We open the outer envelope, we place that in a box because it's election material, has to be maintained. We take out the unmarked inner envelope and we put it in a separate, trying to show you here, a separate bin. We do that for every single outer envelope that comes in. That way I have the outer envelope bin, which is just kept for official record purposes. And I have the inner envelopes with no markings separate and apart. Now I have secrecy of ballot. So I take the inner envelope in, I stir it up to make sure that everything's mixed up. And then I have my ballot counters then open the inner envelopes and start counting as you normally would at the election. What you get at the end of the day is secrecy of ballot because people who go in and inspect the official records will only see limited proxies, the outer envelopes, and they will see separate and apart the inner envelopes in the ballots, but they can't connect the two. So it's something a lot of clients in the HOA context are concerned about, the secrecy of the ballot. Again, it's something that has to be in your bylaws, but there is a methodology to do it. The good news is that this is standard statutory practice in the condominium context. So if you do make the switch, you do pass an amendment to allow absentee or secret ballot in the HOA or for your HOA through an amendment to the bylaws, your management company can walk you through the process a whole lot easier. So HOA board vacancies. So if one of you decides that I've had enough and I no longer want to be on the board of directors and there's a vacancy, you have to go ahead and look to your bylaws first. Nearly all HOAs state that if there is a vacancy on the board of directors, that vacancy is filled by the board of directors at a duly noticed meeting. So the board will select who will fill and be appointed to that directorship for the remainder of the term. That being said, every once in a while, there is a client who says if there's a vacancy, it has to go back to the membership for a special election. So look at your bylaws. If it says it's the board that fills it, it's the board. If it doesn't say anything, it's the board. But if your bylaws state if there's a vacancy, it goes to a special election, you're one of the oddballs. Talk to management, talk to legal counsel, and go through the process of getting that seat filled. Note that in most situations, the obligation to fill a vacancy is may, not shall, meaning it's not mandatory. If your annual election is in January of every year and somebody resigns in October, the board may make a strategic decision to say, we're not going to appoint someone to fill that vacancy. We're just going to wait for the annual election. So it's permissive New, well, I say new, it's been in effect for a few years, is electronic voting. And these next two slides deal with that. So what that is in lieu of a physical ballot that people go ahead and complete, or a limited proxy, or the double envelope system that I explained, is through a board resolution. And so long as it's consistent with your bylaws, the association can implement electronic voting. Practically, that means that a third-party vendor is hired and they conduct an online election for at least the members that opt in to go ahead and do so. And so those members, in lieu of receiving physical documents, will receive an email with a link. They will log in with their username and password, and they will click to cast their votes at the meeting. And this statute recognizes that those clicks constitute that individual's vote for the election of the board of directors. So how do we implement this, John? Well, the board of directors has to adopt a resolution. You have to provide 14 days notice of all members for the meeting at which the resolution will be considered. The online voting has to be consistent with your bylaws. So every once in a while, I'll see a client that doesn't allow proxy voting, right? You have to cast your ballot in person, and you do not get to cast a ballot in the election. Those situations, because this electronic voting is considered a limited proxy or a quasi-limited proxy, you can't have electronic voting. We would have to amend your bylaws. But for most associations that allow limited proxy voting, you can implement through a board resolution electronic voting. The biggest downfall to this is you have to hire a third-party vendor. It can be a few $1,000s depending on the size of your association. So you have to vet them, you have to pay the cost. And probably the biggest thing is you have to realize that you can't force all members to vote electronically, meaning that if there is one holdout, you're holding what I call a hybrid election, meaning that people are voting online and you're still going to have to do the physical mailing to those people that did not sign up to vote electronically. So you're never going to get 100%. You can't compel people to vote electronically. By default, it is the old school method, and only those who opt in are who you can do electronic voting through. They have to opt in writing. I believe Vesta has a form, but we certainly have a form too that allows members to opt in for this type of electronic voting. So that can certainly be obtained from your management company. Any member voting electronically by way of an electronic voting system shall be counted in attendance for quorum purposes. So what that essentially means, much like if you turn in a limited proxy, you're counted for quorum purposes. Your online vote means you're physically present at the annual meeting and a quorum can be established. The members' consent to online voting is valid until they opt out. So you have to opt in, one, and they don't have to opt in every year. Once they've opted in, you can continue to handle them through electronic means and electronic voting until they, in writing, opt out. So that brings to a conclusion electronic voting, the election of directors. Again, if you'll hold your Q&A to the very end, certainly put it in the box, but we'll move on to association official records. So official records, very important that I put in here because it is the number one pitfall that I have with clients that they run into. And in a few slides we'll get to, well, what happens if we don't maintain official records, John? Or what happens if we don't make them available to the members? That's when I talk about the pitfalls and the consequences. But first, let's talk about what is an official record. So I hear a lot of clients refer to operating in the sunshine. Well, HOAs, condominiums, cooperatives don't fall under Florida sunshine laws, but we have basically laws that parallel what governmental entities have to do. Meaning, one, you have to conduct business in the open at duly noticed board meetings. And two is you have to maintain your records. And if a member wants access to them, to inspect them, you have to make them available. So official records must be maintained within 45 miles of the HOA property. I have clients that I recently took one over and they said, well, our manager is based out of Boca, right? And I'm in the Vero office. Well, if a member wants access to records, we can't make them drive to Boca. they can come to my Earle office if I'm within 45 miles of the client, or we can make it at the clubhouse, or we can make it at the board member's home, or we can make it at Kinko's, so the public library, but it has to be made available within 45 miles of the HOA. And for the most part, you have to maintain those records for 7 years. That does not mean that we get to year 7 and we start burning paper. I recommend that there are certain documents that we always keep, building plans, engineering certificates, and so forth. But when you talk about election material, when you talk about bids, when you talk about financial records, when you get to 7 years, there's no longer an obligation that you maintain those. And importantly, talking about inspections, you have 10 business days. If we get a records request, we are on the clock. There are no extensions, not COVID, not hurricanes, nothing. You are on the clock. So very important. We recognize the receipt of the official records request, calendar the deadline, and get to work. So let's start with what is an official record of the association. Long list here. I think we go through all the way, I think L or M or something like that, but I'll go through it quick. Copies of plans, specifications, permits, warranties, pretty obvious, right? Things that talk about the infrastructure of your community, a copy of the bylaws and the amendments, your governing documents, again, something you should have. Copy of the articles, copy of the declaration, copy of the rules and meeting minutes. All things that need to be kept. Those are documents produced in the ordinary course of business. Pretty obvious those should be maintained. Your meeting minutes, that is the record of the action the board took, so very important. I always recommend that clients, and I think most of the managers recommend this, you have a meeting minutes book so that if somebody wants to look at the meeting minutes, very accessible, very easy to go ahead and either pull that physical book or if they're stored online to make those available to the members. A current roster of all members in their mailing address and the parcel identification. Very important note here. The associations are required to maintain email addresses for electronic transmissions where the members have been given authorization for communication through electronic transmission. The association is not required to give out that email. So what this really references is that electronic consent. Hey, instead of mailing me a notice of a meeting or notice of annual meeting, I would like to just receive it via email. Personally, that's how I operate. It keeps me more organized. If a piece of paper comes in my house, the kids draw on the back of it and it gets thrown in the trash, right? So when the member opts in and says, I want to receive electronic communications, that form itself is part of the official record. If somebody wants access to the email address, you need to redact it when it's produced for inspection. You should not be giving out member email addresses. All other associations, insurance policies, copies thereof, a copy of all contracts, management agreements, leases, attorney retainer agreements, landscape contracts, those types of things. You also have to maintain, this is the exception to the 7-year rule, if you do competitive bidding, right? So we're doing road resurfacing and we're doing competitive bids. The bids that you do not use have to be kept for only 1 year, not 7 years. Financial and accounting records. So these would be your monthly cash flow statements, your yearly audits, bank statements, and so forth. Periodic statements, tax returns, any financial information, you guys need to keep those for 7 years. A copy of the disclosures under 72401, so that's used with the sale of homes. Talk to your manager if you have questions about that. And importantly, number L here, it's catch-all. All other written records of the association not specifically included in the foregoing, which are related to the operation of the association. So basically, if it's a written document that's produced by the association in its regular course of business, it needs to be maintained as part of the official records. Importantly, board member email addresses are not considered official records. So if John Carrigan, as president of an association, sends an email from my personal email address to another board member concerning an association business, that is not part of the official records, does not have to be placed in the official records. There's arbitration case law that makes that abundantly clear. But once I, John Carrigan, as president, send an email to the manager with instructions to do something, we do have an official record that should be placed in the official records. So just be careful about when we're communicating, understand what is subject to inspection and what is not. As part of my practice, I do a lot of litigation. Another distinction is, although it's not part of the official records, that board member to board member email, still subject to subpoena. So always follow the golden rule. If it's something bad, make a phone call. Don't put it in writing, right? So let's talk about things that are not accessible. So we have the catch-all here, and I talked about the distinguishment on that, basically everything. What is not? So attorney-client privileged communications are not subject to inspection. That being said, it's limited to work product regarding threatened or pending litigation. So that's either relating to a current lawsuit or something that could turn into a lawsuit. Fortunately, in my job, a lot of what I deal with is risk management for things that can end up in lawsuits. In the case law and the arbitration context is pretty broad as to what the attorney-client privilege applies to. But what I recommend is that each association have, I'll call it a red folder, it can be a blue folder, green folder, but something where we put correspondences from the attorney in. And that way we know that if somebody wants to come inspect records, they don't get access to the attorney file. Other stuff that is not accessible to the members. Information obtained by an association in connection with the approval, lease, sale, or other transfer of a parcel. So what this relates to is if we run a background check or a credit check on a tenant or a potential purchaser, that is not subject to official records. The certificate of approval that's ultimately issued or the letter of denial would be subject to official records, but not the background check itself. Personnel records of association employees. So this would be that if you have an on-site manager and the association issues a payroll check and there's a breakdown of, deductions for taxes, FICA, insurance, so forth, not official records. You can't find out what the manager's healthcare plan is or how much they pay for that. So that would not be subject to it. And then number 4 is medical records of the parcel owners. So that relates to if there is a fair housing accommodation or some other component where a member's medical records are provided to the association. Those are protected by not only medical privacy laws, but also pursuant to the statute itself. More obvious things, social security numbers, driver's license, credit card numbers, email addresses, telephone numbers, fax, emergency contact information, things that are personal identifying information to the unit owner. I will say that there are going to be a lot of forms in the association's records which will contain this information, but also contain items that are subject to official records. So what I always recommend to clients is that if we have some sort of document that reflects a homeowner's social security number, a telephone number, an email address, that we can produce the document for inspection, but we're going to redact the protected information. That way, nobody can run to court and say, they didn't produce it, judge, and there's components that they need to produce. No. We produced it. It's just redacted. And if they have a complaint about that, that's when I'll go to court and fight for you. An owner may consent to the disclosure of such information. Very unusual, but certainly they can go ahead and waive the ability. They could, if you guys have a directory, what I see is a lot of telephone books for the community. Owners can say, yeah, I put my email address in there or put my telephone number in there or my fax number. So those are typically the things that are waived. But again, they have to waive it in writing. Any electronic security measures, obviously it's a password to the login and stuff like that. And then the software and operating system used for the association for manipulation of data. So if you use QuickBooks or something like that, if you're a small association without a management company, the unit owners are not entitled to use that QuickBooks software. But if they want financial statements out of that QuickBooks software, that would be official records. So the pitfalls 720-303 subsection 5. We, as an association, get a records request. It comes in. What do? First thing we do is we stamp it, and we mark the date that we received it, and we put the initial under who received the document. So if it's a management company, they probably already have these standard practices in place. If it is a association without a management company, your manager is only a portfolio manager, meaning they're not there on site. If you get an official records request, we timestamp it and we indicate who intook it. That establishes when the 10 days run from. If you get it certified mail, we still do it, but obviously the certified mail will reflect when you received it, the same as the certified mail return receipt card. You have 10 business days to go ahead and produce the records and make them available for inspection. Note, importantly, I did not say that you have to go ahead and make copies for the individual homeowner. You can send them an email with copies of everything if that's easily done, but your statutory obligation is simply to make them available for them to look at within 45 miles of the HOA. If the homeowner comes in and inspects, then they can request copies be made. If the HOA has a copy machine on site, it can provide copies, no more than 25 pages. If it's more than 25 pages, I suggest you send out to Kinko's. What I recommend practically for my clients is if we get an official records request, whether it's through an email, whether it's through certified mail, hand delivered, we timestamp it, we indicate who received it, and we get the people who have the records on notice, hey, we're under a deadline, we need to produce them by this date and make them available. Once we get our feet under us and decide, okay, we have the records, they're going to be available on this date, send a letter to the homeowner, something in writing, send an email to the homeowner stating we've received your records request, they will be made available for inspection on this date and time at this location. And that date and time has to be within the 10 days, right? Excuse me. And then they can come inspect, and if they want copies, we can go through that process. But what I get a lot when I litigate these cases is we receive the records request, we timestamped it, we went ahead and collected the records, and oops, somebody forgot to notify the owner they were available for inspection. 30 days goes by, the homeowner says, I never heard from them, and we get a small claims lawsuit, right? Plus a claim for attorney's fees. And that's where we start running into issues. So you need to make sure you communicate back to the homeowner, one, we've received it, two, to be made available on this particular date and time. The association, if they do request copies, can charge a maximum of 25 cents per page. Again, if it's over 25 pages, I recommend you send out to a third-party vendor. If you do that, you can condition the production of the copies upon the payment. So if I send out to the FedEx or the Kinko's, I don't even know if they have Kinko's anymore, but if you do, and it's $25 in copying charges, we get them back, we call the homeowner, we send them an email, say, hey, we got your copy for you, $25. We'll give them to you when we get the $25 from you. So they got to bring in a check and give it to you, and then you give them the record. In addition, the association can charge personnel time. If it's more than 1/2 hour and more than 25 pages. This always gets into fact issues about, well, what is personnel time? What is reasonable? I recommend you send out to a third-party vendor. That way, it takes any of the allegations of impropriety out of it. The last case I had, it was $65 per hour for the personnel. And was that reasonable or not? And we're spending X number of dollars on John to litigate this in court. In my opinion, a waste of everyone's time. So I recommend sending out to third-party vendor. Never had an issue that way. The association can also make the records available via internet. So if your documents are online, you can send them the link, or you can send them an email, which will be your trail that you've provided access to them of the records. And as of July 1st, 2013, the legislature finally recognized that people have portable scanners, people have phones, people have iPads that they can bring in. If they want to bring in whatever device they can make copies of themselves, absolutely fine. They have the right to go ahead and do so, and we cannot charge them for that. So association may adopt written rules regarding records inspections, but may not limit the same to less than 1 8-hour business day per month. I recommend to my clients that they consider adopting rules and regulations concerning records requests, because they run into the situation where one homeowner who is upset with the board of directors makes 6 written records requests each month, and these volunteer board members or a manager who's dealing with everything else the association is running around looking for records and not being able to perform their job. So what I recommend is you can limit it and say we will accept 1 records request per month from every homeowner, and you have up to 8 hours of our time to come to our office and inspect the records. In my mind, in my experience, that has really controlled those homeowners who use the official records request statute to abuse or harass the board of directors. All right, failure to provide access to records. So John, what happens if we blew the deadline, right? So you have to understand that records requests can come in any form, right? So they could be hand delivered, they could be emailed, they could be sent via certified mail. You send it certified mail, there's a rebuttable presumption by the person making the request that it was delivered on the day that the return receipt, that green card, shows. But it's not a condition precedent to be entitled to statutory damages. So if you're a homeowner wanting to make a records request, I always recommend it sent via certified mail because it creates that rebuttable presumption which comes up in court. But if you're an association and you get an email or you get a hand-delivered note, you got to treat it the same as a certified letter. A member can get up to $50 per day, up to a maximum of $500 for failure to respond to a records request, in addition to legal fees. So we get a records request, we blow the deadline, right? John, it's been 30 days. Somebody was out of town, we just blew it, right? Your damages are the requesting party's damages are $500. The problem we run into is plus prevailing party attorney fees. And so you get into a small claims case and you get an aggressive attorney on the other side, and they now have a $3,000 bill. And I'm going to my client saying, well, the settlement offer we need to make is now $3,500 to get rid of this case, so we don't have to try the case and deal with that, not just the $500. So I have a lot of clients that just look the other way and say, yeah, it's only $500, and they'll have to sue us. I've been involved in enough cases, this needs to be taken seriously. And so again, good practices in place, having rules in place, understanding what to do when that records request comes in, very, very important. So that brings an end to the official records. Let me jump into 2, I'll call them miscellaneous categories. One, these are issues that recently came up, is Fair Housing Act accessibility on websites. I bring this up because websites relate to official records, because sometimes official records, board meeting minutes are kept on there. About a year ago, there was a group, a disability advocacy group that was sending out demand letters to all of our HOA clients saying that we're going to sue you because your HOA website is not accessible to those that are either visually impaired or hearing impaired online. And there is this WCAG 2.0 compliance standard. I am an attorney, I am not a web developer. But that is, I'm told, the latest and greatest as to online accessibility. What I can tell you is if you receive a demand like this, or you receive a complaint from a homeowner that your association website is not accessible to disabled individuals online, talk to your management company or talk to your attorney. There is a widget, which again, I don't understand the individual components of it, but it's an item that you can purchase. It's like $50 that you can add to your metadata on your website. And what it creates is a little icon up at the right-hand corner that you click on, and it makes it WCAG compliant, meaning that if somebody has the software, it will read it to them if they're visually impaired, and it can turn any visual components into text through this widget. So I'm not telling you to go out and buy it, but if you receive the demand letter or you receive a complaint from a homeowner, know that that's out there. For the most part, I don't think we've received any demand letters in the past 4 or 5 months. Coronavirus kind of killed all of that stuff. But if it rises again, there is things that can be done. The second one is MARTA, Marketable Records Title Act. And what you need to know for this is that if your association's governing documents are coming up on the 30-year mark since they've originally been recorded, you need to be talking to legal counsel and discussing what needs to be done. There's a document that needs to be recorded in the public records, preserving the governing documents, ensuring their continued enforceability after the 30-year mark. And if you're past the 30-year mark and that hasn't been done, just note that there is a revitalization process that requires a membership vote. I'm not going to get into specifics, but just look at that. Look, when was my original declaration recorded? Are we coming up on the 30-year mark? We should be in contact with legal counsel. If we're over the 30-year mark and it wasn't preserved, again, we need to be in contact with legal counsel. The problem occurs if you get over the 30-year mark and you don't preserve, and you're not in the process of revitalizing, the enforceability of your covenants is subject to challenge. And people can start saying, we're out of here, we're leaving the community. I'm no longer part of the HOA. You can't have any governance over me. So just be aware of that. All right, coming up on one of the last sections here, HOA dispute resolution. So this is typically in the context of your use restrictions. John, we don't allow trucks in our community. John, we require the exterior of our homes to be maintained at a certain level to ensure the continued property values in our community. What do we do if a homeowner is not complying? So there's this provision that talks about 72311 in the pre-suit process, but let me back up a second. What happens if we receive a complaint or the property manager is out there and they see a violation, something that is not in compliance with the use restrictions? In my own community, I had to paint my mailbox last weekend. So even board certified attorneys get letters from their HOA. But what do we do? Well, the first thing we should do is pick up the phone and contact manager. Vesta has, I've seen them, standard violation forms. Essentially, it's a courtesy letter that goes out to the homeowner saying, you know, you're part of the community, you agreed to certain covenants and restrictions. We request within X number of days, you fix this specific violation, right? And if it's a mailbox, if it's cleaning your driveway, if it's cleaning your roof, most people, when they get that courtesy notice, comply and the enforcement is done, right? What happens if they don't comply? What happens if we get past the 30 days and they haven't complied? Well, at that point in time, maybe we send a official violation letter, right? We've asked you to comply, you haven't, and now we're sending you a formal violation letter. If the violation is not cured within X number of days, the association may levy fines under 72305 in your bylaws, or we'll send to the attorney, and then you're going to be on the hook for potential attorney fees. So that violation letter, that second letter, is generally a little more forceful. Again, most people in those first two, either the courtesy letter or the violation letter, do come into compliance. Hence why having a good management company that stays on top of these things is so important. But what happens if we get past the deadline in the second letter and we still have a violation? What do we do, John? Well, there's really a fork in the road at that point in time. Number one, you can levy fines. Take a look at your bylaws and take a look at 720.305. And a fine is essentially the speeding ticket of the HOA world. It says that you're out of compliance with a particular use restriction. Your driveway is dirty. You have, your front bed needs mulching. The roof has mold on it, whatever it may be. And we are going to levy fines of $100 per day up to a maximum of $1,000. That's what the statute allows. You send out a letter stating that that's what action is going to be taken. The board needs to vote to go ahead and levy the fine. And the letter that goes out that levies the fine states that due to your failure to comply, $100 per day up to a maximum of $1,000 for continued noncompliance. And that letter has to state that if you disagree with this fine, you have the opportunity to appear before a fine committee, an independent committee separate than the board, that will hear your arguments, and decide whether to uphold the fine or decline to enforce the fine. That fine committee has to be established by the board, has to consist of at least 3 members who are non-board members or family members of board members, hence the independent aspect of them. And they essentially will meet whether the homeowner shows up or not and go ahead and vote to uphold the fine. Or if the homeowner shows up and says, look, I was out of town, I apologize, it'll never happen again, they can say, we're not going to uphold the fine, because you brought into compliance, and we don't, because we think you're otherwise a good steward of this association, we're going to decline to impose the fine. In that case, the fine goes away. So that's option 1, is to levy fines. Most of the time that achieves compliance. Nobody likes a speeding ticket. So what we recommend is once the fine is imposed, you put it on the homeowner's account statement, and then it just remains on there. Typically, they get paid within 30 days. If they don't, you can send it to the attorney, and we can go into collections. And I'm not going to get into that, but that's where the fine ultimately leads. The problem with the fine, well, the good news with the fine is you don't have to get the attorney involved. So there's no expense to the association other than the stamps to go ahead and send out the letters required by statute. The disadvantage of fines is when you get the stubborn homeowner who doesn't pay attention to the courtesy letter, doesn't pay attention to the violation letter, doesn't care about the fines. That's when I have to go ahead and get involved. That's when, well, what do we do, John? How do we compel this owner to come into compliance, to clean up their property, to go ahead and get rid of the truck that's not permitted in our community, to get rid of the boat they're parking in the front? What do we do? Well, that is the statutory enforcement process under 720-311, which requires that in these types of covenant disputes, the association make a demand that the homeowner participate in pre-suit mediation. That means before we go to court, we choose a mediator, and they go ahead and attempt to find a solution that between the 2 parties. It's voluntary, number 1, and 2, the mediator they're not a judge. They don't rule on anything. They simply explain to the parties that if we do not resolve this today, through the homeowner bringing into compliance within X number of days, or the association agreeing not to proceed with further enforcement activity, that the parties will end up in court. And so it's essentially a chance for you to sit across from the homeowner and explain to them what's coming and that they need to come into compliance. Most of the time, this results in resolving the case, because once you get to court, it's a zero-sum game. There's a winner and there's a loser. And what the mediators do at pre-suit mediation is say, today you can control your own destiny. We can craft a settlement agreement that finds some common ground and resolves this violation, and there's no more attorney's fees, there's no going to court, there's no having some third party decide the fate of both of you. You guys can control your own destiny. So what is subject to this? Use of or changes to the parcel or the common areas, covenant enforcement, which I just talked about. If a homeowner wanted to challenge an amendment and how it was passed, that would be subject to this. Meetings of the board of directors, if you don't have an open meeting and the homeowner wants to complain, access to official records. Importantly, it does not include anything to do with assessments or collection of fines or other financial obligations. So homeowner doesn't pay their HOA assessments, you do not have to go to pre-suit mediation. 99% of the cases that I handle deal with covenant enforcement disputes and specifically use restrictions. So the statute provides a specific form. It has to be sent via certified mail. It gives the opposing side 20 days to go ahead and agree to participate. And you have to agree to pay 1/2 the mediator fee. I will tell you that although you can use the statutory form, you need to be with legal counsel at this point because there is significant ramifications going into mediation and coming out of mediation and going into a lawsuit. So do not attempt, if we get to this point, you need to be with the attorney. If the homeowner fails to participate, or if an association receives a demand for pre-suit mediation and they fail to participate in the spot within 20 days, if litigation subsequently ensues and you prevail, you cannot recover your fees, which is a huge, huge penalty. So if I have a client that fails to respond to a demand for pre-suit mediation, the homeowner then files suit. I am now in a position where I know, even if I win and I crush this homeowner and prove to the court that they were wrong and the case gets dismissed, the $20,000 in legal fees to get there, they'll never go ahead and see. So if you receive a demand for pre-suit mediation, always important, one, to pick up the phone and contact your attorney or your insurance company to see if they'll appoint insurance defense counsel and respond, so you preserve the right to assert prevailing party attorney's fees. And if you send one out, the homeowner is on the clock. Failure to participate results in them not being able to recoup their fees. So if we file suit and they prevail for some reason, then you would not be obligated to pay their legal fees. If informal dispute resolution is unsuccessful, you then go to court. And what happens is always a question I get. We typically, in use restrictions, are asking for an injunction. So homeowner's driveway needs to be power washed, right? And the roof needs to be clean. They're just not maintaining to the appropriate community standard. Their home is a blight on the community. I am going to court, filing a lawsuit for injunctive relief saying, Judge, here's the use restriction. They have to maintain the exterior of their home. Here are the pictures showing that they're not doing it. Enter in a final judgment for injunctive relief, compelling them to do so under threat of either jail time or court-levied monetary penalties. And so what happens at the end of the day is, if I prevail and prove my case, I'll get an injunction. And if that homeowner doesn't comply, then I can request the court hold them in civil contempt and put them in jail. I've been practicing 12 years. I've only gotten there twice, right? So it is very, very rare that we get there. But that takes you from the courtesy letter that Brenda and Vesta would go ahead and send out to the end of the day, final judgment, homeowner, either you comply or you have to come answer the judge why you shouldn't be put in jail. And that's how we get there. And the whole goal along all of the spectrum is at some point for the homeowner to say, I've had enough. I'll agree to clean the exterior of my home, power wash, so forth. Of course, we never hope we get to the very end, but it does happen. The goal is, with Brenda and Vesta, is to essentially go ahead and resolve it through the violation notices or the levying of fines, and then you don't run into attorney's fees. So that is the end to covenant enforcement. Again, if you have a question, go ahead and put it in a Q&A and we will go through that. I'm going to finish up. I only have a few more slides. Very important to stick around for these. It's the statutory updates. Again, our Reb Law review, which either we can provide or I'm sure Brenda can provide you a copy of, contains all of the statutory updates. I'm only going to hit the high level ones. There are a lot of nuances, so just be aware this is not everything. Number one, delinquent assessments under 720-3085. So what the legislature now requires after July 1st of 2021 is that if you're going to turn a homeowner over to the attorney for collections because they haven't paid their HOA dues, you have to have your management company, or if you're self-managed, a board member, send a late notice using this statutory form. It's a condition precedent to it going to the attorney and allowing my firm to charge legal fees for our time and expense in handling the collection action. So the way our firm works now is, if you want to turn a matter over to collections, we require a copy of the statutory form, the late notice that was sent to the homeowner. That way we don't get, halfway into a collection action and realize, oh, oops, the client forgot to do step one. So just be aware of that. I'm very confident that Vesta probably has a form that is now compliant with the new statutory template that they want used. If you are self-managed, certainly you can email me. We have a form that we've been sending to our self-managed clients that you can put your name at the top of there and utilize the form, and we can help you walk through that process. But again, that is stuff that is done before it goes to the attorney's office. One other thing I just want to point out, it's a 30-day cure period. So if you send this, you have to wait 30 days before it can be referred to the attorney's office. The other statutory updates pertain to rules and regulations. There was a period of time, I think beginning in 2016, where association rules and regulations, which are generally adopted by the board, but again, check your bylaws for rulemaking authority, but generally by the board of directors, had to be recorded in the official records of the county in which you reside. So if you're in Brevard County and the board passed new rules and regulations, to become effective, those rules and regulations had to be recorded in the official records. The legislature amended 72301 subsection 8 to clarify that what has to be recorded does not include your rules and regulations become effective. So that doesn't mean you don't still do it, so that the title company, when a new homeowner purchases, ensures that the homeowners get a copy of the rules, but it's no longer a condition precedent to the rules becoming effective. So just know that. And then rental restrictions. This is something that is a little new to the HOA context, but essentially, if you want to adopt an amendment to the association's declaration imposing any type of rental restrictions, that will only apply to owners who purchase after that date. So I just had a client come along and say, John, we want to implement approval and denial authority under our declaration. That if a pedophile wants to come into our community or somebody with bad credit and we don't think they're financially stable, we want to be able to deny their lease application or their sale application. Well, under this new statute, that's fine. We can still attempt to pass an amendment approved by the membership for that, but it will only apply to those owners who purchase after the effective date of the amendment. So it won't apply to any of the existing owners. The only exception to this is one, if the newly enacted amendment, it does allow you to establish a minimum lease term of 6 months, and it limits the number of rentals to no more than 3 per calendar year. So if you don't have any leasing restrictions on the books and you want to implement a leasing restriction amendment, you can implement a minimum term of 6 months and no more than 3 leases per calendar year, and it will apply to existing homeowners. It's not only prospective enforcement, it does go back. I want to also point out, and I had this question come up in another seminar, this does not affect existing rental restrictions that are already in place as of July 1st. It's only if we decide to touch or concern the rental restrictions after July 1st of this year. So if they're on your books already, no worries. If you want to implement them now, it's a more complicated discussion with your legal counsel. And then lastly, emergency powers. We are now seeing a spike in COVID-19. And the question we're getting a lot is, John, what are our emergency powers under Florida statutes? Well, in July 1st of 2021, the legislature enacted amendments to 72316 that provide you can now rely on the guidance of not only emergency management officials, so fire, police, your local government when it comes to hurricanes, but also on public health officials and their recommendations. So you can look to the CDC, you can look to the Department of Health for guidance in implementing restrictions in your community. But however, I want to be very clear that Florida is no longer under a state of emergency. The COVID-19 state of emergency, I think, expired at the end of May, maybe the end of June. There is no one in place. So the question I've been getting for a lot of clients lately is, John, can we close back down our clubhouse? Can we close back down our gym? The answer is you can do anything you want, but in my opinion, it would be subject to challenge. The ability of clients to close common facilities based on the pandemic was because we were in a state of emergency declared by the governor. That no longer exists. So whether you can close certain components of the common facilities, specifically indoor areas, I think could be subject to challenge. Doesn't mean you don't win at the end of the day and convince some local judge it's for the best of your membership, but it's subject to challenge. I don't think it's as clear as it was when that state of emergency was in place. Of course, if the governor comes back and declares a state of emergency, possible, or your local county or municipality imposes a state of emergency, you could certainly rely on that if you decided to impose restrictions concerning the common areas. So with that being said, those are the statutory updates. Just a conclusion here that as you can see, every legislative session we get through, the legislature sinks its teeth a little bit more into the HOA context. So if you've ever lived in a condominium in Florida, you know it's very heavily regulated, not only under Chapter 718 Florida statutes, but there's an administrative code and there's the DBPR that oversees operations of condominium associations. In my opinion, within the next 10 years, you'll probably see them have their grip over HOAs too. Real possibility here. So very important every year. Number one, attend these educational seminars. There's always going to be updates and tweaks that we make to them. Number two, if Vesta does offer a seminar about statutory updates, either with our firm or another firm, highly, highly recommend that you attend, because we live, especially this year, in an ever-evolving legal world when it comes to community associations. So always good to be up to date with the latest and greatest when it comes to that. So with that being said, I want to thank everyone for attending. I will take a Q&A and we'll work through that, but I don't know if there's an obligation to stay on after I hit my conclusion from the DBPR's perspective. I do want to take a second to thank Vesta for inviting me to give this presentation today, and especially to Brenda and Leslie. Certainly always good to get in front of a bunch of familiar faces from my client's perspective, but people that I may not go ahead and work with every day. And I thank you for your time.
Thank you so much, John. Really appreciate it. Very informative certification. We've got about 16 questions. And I'll just go from top to bottom. Other than the annual meeting election process, is there a way to remove a board member or officer? For example, no confidence vote.
So it's document specific. When we talk about officers versus directors, understand that those are two different things. For most HOAs, the officers are the president, the vice president, the treasurer, and the secretary. Those officers are appointed by the board of directors. So at any point in time, if the board of directors says, we don't want you as president, we can strip you of that title. You're still a director, right? But you're no longer president of our association. When you talk about people that sit on the board, the directorships, those people that are elected at your annual meeting or appointed, if there is a vacancy, the only way to get them out is one, a recall. And a written recall requires 50% plus one of the entire membership to recall a specific board member, death, or resignation. That's it.
Okie doke. Next one, it's kind of a two-part question here. Can dollars from a reserve fund, reserve budget item, pooled or straight line, be used to pay daily operating expenses? And does the board or homeowners have to approve a change to move from straight line reserves to pooled reserves?
So good question. So number one is you can't take reserve money and use it for daily operating expenses. It's used for those reserve components. So if I reserve line item for the roof to the clubhouse and we get involved in a lawsuit where we have unexpected legal fees, I cannot take that reserve money and put it towards payment of those legal fees. I have to call up the attorney and we're going to have to work out a payment plan, I guess. So that's component number one. The second question related, what remind me again, it was.
Do the board or homeowners have to approve a change to move from straight line reserves to pooled reserves?
Yeah, well, it depends. If it's a mandatory reserve and you want to convert to a pool, I'm sorry, if it's a mandatory straight line reserve and you want to convert to a pooled reserve prospectively, meaning that this year we have straight line, but next year we would like to move to a pooled reserve. It is a vote of the membership at a meeting at which a quorum is present, and you have to achieve 50% of that vote. So it's not 50% of the whole, but it's 50% plus one of those members present at a meeting in which a quorum is established. So the membership does have input.
Very good. Next question, if the board is still comprised of the developer, hasn't reached turnover yet, can the developer board fully waive reserves, or do they still have to make a vote to homeowners members?
What an excellent question, because I'm currently involved in turnover cases that this specific issue has come up. So I'll tell you my position. In our firm, we don't really work pre-turnover with developers. We're mostly just, we represent through turnover and the board member or a membership run board of directors. It's my opinion that the developer cannot waive reserves unilaterally, but that the developer can cast its votes for units that it still owns to go ahead and achieve the waiver. So if, I'll give you an example, if the community is 100 individual lots and the developer owns 55 of them still, well, the developer has to have a meeting, has to have a vote, but it can use its 55 votes, 55 lots, to go and achieve the necessary vote to go ahead and waive reserves. But if the developer only owned 10 lots, then he would have to go ahead and get the remaining number of homeowners to achieve the necessary result. So unilaterally, the answer is no. But if he has a majority vote, the answer is yes. But make sure he can't just do it and say, oh, I could have done it. No, we have to have a meeting. You have to get notice. You have to be able to show up and object to the same. And if he outvotes you, he outvotes you.
If we have a nomination form for any potential candidate to complete prior to the meeting, can we ask the candidate if they have any felonies?
Absolutely. That's a great idea. Very good idea. Absolutely. And if they indicate no, we can rely on that. If they indicate yes, then we probably need to pick up the phone and talk to either myself, Brenda, or legal counsel.
There are no procedures in the governing documents addressing advance nominations, yet we've been told that if the advance nominations are requested by the manager and the same or fewer nominations are received in advance of the meeting, then we've been told that floor nominations are not permitted. This sounds wrong from what I have heard from you and other legal sources.
So the reason I like advance nominations from the floor is you know whether you're going to have an election going into the annual meeting. If my bylaws provide that all nominations must be submitted to appear on the ballot 14 days advance the annual meeting, and I have 5 open seats and only 5 or 4 or 3 people put their name in the hat, I know going into that meeting, I am not having an annual election. Those members who put their names in the hat, so long as they qualify, will take their seat at the conclusion of that annual meeting. When you have nominations from the floor, because you do not mandate advance nominations in your bylaws or your articles, we can request people submit ahead of time, but I have to allow nominations from the floor. So to walk through my example, 5 open seats, 4 people put their name in their hat. Going into the annual meeting, I have to allow nominations from the floor. If 2 people stand up at that meeting and say, I would also like to be a candidate, I have to have an election, versus maybe nobody stands up at the annual meeting and I don't have to have an election. So there's a little bit of uncertainty going into it. I would go back to what I stated in the slide. Your bylaws, your articles have to provide for advance nominations. If they do not, if it's either silent or indicates nominations from the floor are required, the statute requires them.
Okay, how do you keep people from voting more than once if it is a secret ballot?
So good question. So what we do, there's 2 components to it. So number 1, let's walk through the individual who shows up in person, right, and wants a ballot to cast. So John Carrigan walks into the annual meeting. We have a double envelope system that's authorized by our bylaws in this scenario. I check myself in with the manager at the desk, and he or she hands me a ballot. I then go fill out that ballot and come back and drop it in the ballot box, right? I can't, well, the manager should really realize if I circle back around, right, and say, I would like to vote again, right? The manager should be able to look at the roster and say, no, I already gave you a ballot. So that's how we prevent the in-person double voting. As to people who do not show up at the annual meeting, but go ahead and cast by virtue of the double secret envelope, what we do is prior to the meeting, we collect all of the outer envelopes, which contain the inner envelopes, right? And we don't open them or anything, right? We just bring the outer envelopes that we received to the annual meeting and we process them much like we're checking in physical people. So we go through the process. We check everybody physically into the meeting that has shown up and give them a ballot. We make sure they didn't submit a double envelope, because if they did, we got to pull it out and say, we can either use this, right? Or you can take this back and rip it up and we can give you a ballot, whatever one you want to use. But if they don't show up at the annual meeting and want to vote in person and say, no, John, just keep the double envelope that I turned in, that's who I want to cast my vote for, then that is essentially my ballot. And so at the annual meeting, once everyone's physically checked in, we go through and we essentially check in who is voting by double envelope. And if they've already been given a ballot, then we call them up and we work through that. And if they have not been given a ballot, either because they're not there or they said, just use my envelope, then we check them in at that point in time. And that is where that committee at the annual meeting is verifying the outside signature, address, and name on the double outer envelope as to who it is, opening it, putting the double envelope in one bin and taking the secret ballot and putting the other bin. That's the separation. That's the anonymity that's created at that point in time. So I hope that answers your question. A little complicated. It's one of those things, when you see it done, becomes very, very apparent.
Here's kind of a related question. Is online voting allowed for more than elections?
Yes. So the number one reason that we get online voting requests is for amendments, interestingly enough, especially with communities that would have people who travel back and forth. So yes, it can be done. If you implement it, it can be done in a way that the resolution we prepare is votes that the electronic voting can be used to go ahead and move reserve money or waive reserves. It can be done for an amendment. It can be done for an annual election or any other vote that may become before the membership. So absolutely, once you do it, you make it broad.
Okay, and I assume that if there is at least a minimum number of board members, the maximum number do not have to be filled. In our association, neither officers or board members need be association members. The only restrictions are that multiple members of the same household cannot be officers, but they can be board members.
Right. So there's nothing provided in the statute. You need to look at your articles of incorporation or your bylaws, and that will dictate the number of board members. The question that probably is arising is, if you look at the individual bylaws or articles for that person asking the question, sometimes we get into a situation where it doesn't say there's 5 board members. It'll say anywhere between 3 and 7. Well, John, what do we do, right? Is it 3? Is it 4, 5, 6, 7? The answer is we go ahead and look to the existing number of board members. If I can have anywhere between 3 and 7, and I currently have 5, right? 617, the not-for-profit corporate statute, requires a vote of the membership to increase up to 7. So you have to have a meeting at which a quorum of the members are present. You have to achieve a majority vote of that to increase the number of directors. Still has to be consistent with your bylaws, but that's how you change the number of directors that can appear on the ballot if you have what I'll call a range of directors in either the articles or the bylaws.
And I'm not sure what this question is. What if all association members do not have access to, I'm going to assume that is supposed to be internet. And I don't know if that is with regard to online voting or what, I'm not sure.
So if members don't have access to internet, then I would suggest that you do not fill out the online voting opt-in form. That's pretty simple. And what that means is, by default, you'll get the physical mailing at the end of the day. But again, online voting is an opt-in system. You can't enforce it on people. And because it's opt-in, I have not had a client yet that has been able to achieve 100% online voting. Everybody's opted in. So you end up with a hybrid system.
Okay. And here's another one. Can the association require a candidate form answering specific, I'm not sure what that BFOQ, maybe bio or biography requirements to be submitted?
The answer is that every member, but for felons and if you're delinquent, is eligible to run for the board of directors and appear on the ballot. So no, you cannot require it. But does that mean you can't send something out and hope that every candidate fills it out and completes it and it's a good idea? I think it's an excellent idea. I think that addressing specific concerns of the association and giving candidates the ability to say, here's my position on XYZ, only makes your members more informed, only results in a better quality candidate on the board.
Okay. We've got 6 more. Great job, John.
That's all right. That's all right.
Okay, so Terry says, homeowner inherited the house through a trust in 2014. She now owes roughly $5,000 in fees, etc., to the HOA. It appears she has no intention of settling the estate to avoid paying these fees. What can we do as an HOA to recover these fees?
So this sounds like one of those situations. I will attempt to answer it generally, but this is something that with those specific facts, you should probably be talking to legal counsel. If you don't have one, get with Brenda or get with Leslie and they can recommend a few. Obviously, my firm's always here. Under 723.085, a homeowner who acquires title is jointly and severally liable for any delinquency that's owed at the time of the conveyance of title. So if the property is still, in this example, in the estate because it's stuck in probate and the person doesn't want to administer it because they don't want to inherit the liability, you should be putting a lien on the property and foreclosing, right? That would probably be my recommendation. If she has acquired title through the probate, then she's jointly and severally liable. Doesn't change my recommendation. You should be putting a lien in place and consider foreclosing. My recommendation just generally as to collection actions is be diligent, come up with a collection policy and follow that collection policy. And that really depends on the amount of your HOA assessment. If you guys are $1,000 per quarter, when somebody falls 6 months behind, that's a lot of money out of your budget. If you guys are $100 per year and somebody falls behind 6 months, not such a big deal. So I think you have to assess your HOA and how aggressive you should be on collection policy. But anytime a property, there's a death of a homeowner, there's a potential bankruptcy on the forefront, there's a pending mortgage foreclosure, very important to get with your legal counsel. Putting a lien in place puts you in a secured creditor position, which has a lot of advantages under Florida law. It would take many minutes to explain. But you need to get with legal counsel and get some guidance to say, here's what we should do in that situation. In the situation that was just given there, where there's an estate and it's pending, a lot of things I do, but getting you in a secure position with claim of lien would be the first one.
Okay, Bob asks, if the developer did not enforce some of the declaration restrictions, can the new board enforce them? What happens if a board does not enforce some of the restrictions? Can the board members be held liable if they neglect to enforce covenants? And can the violations be enforced now?
Gotcha. So leave that one up for a second. I'll go one by one so I don't forget them. So if the developer did not enforce some of the declaration restrictions and turnover has occurred and I have a new member-run board come on, there's a case, I want to say it's Keys out of 1984 that dealt with an age restriction that the developer didn't enforce. And the court held, and this is still good law today, that a member-run board of directors cannot be held for the developer's lack of enforcement as to certain covenant restrictions. 2 key components to that. Number one is that doesn't mean that if somebody's had up the gazebo in their backyard for 5 years and then turnover occurs, we get a new statute of limitations, we can go after them. That's not what that case stands for. But what that stands for is that if somebody has a gazebo for 5 years and the developer never went after them because they just want to be friends with everybody, turnover occurs, new board comes in, and a new homeowner comes along and says, I'm putting in a gazebo because that guy has one and you can't stop me. That new homeowner, we can say, wait, nope, clean slate. Our restriction says no gazebos, you can't have one. And the fact that that guy has one does not create a selective enforcement issue. So that's the current law in Florida, and I think it's very advantageous, so be aware of that. Number one, what happens if the board does not enforce some of the restrictions? So put aside my example. We've turned over years ago. Previous board didn't really want to be friendly, didn't really want to enforce anything, right? And now the new board wants to come in and enforce things. Well, we're probably going to have a lot of selective enforcement issues, meaning uneven or arbitrary enforcement of the use restrictions. You enforce it against me, but not this guy. That's the defense we go ahead and typically get in a lot of use restriction cases. There's ways to go ahead and remedy that. A lack of enforcement previously. It's called a line in the sand letter. So a letter you send to your membership saying, hey, the prior boards may not have been as diligent as they should have been, but we live in a deed restricted community. It's important we uphold the restrictions. And we send that out to everyone. We give them 60 or 90 days to comply and bring everything into compliance. And that essentially creates a clean slate for that new board of directors to move forward on and eliminate the selective enforcement defense. A lot of nuances go into that, to talk to your legal counsel if it's something you proceed with. And then, can the board members be held liable if they neglect to enforce the covenants? Yes, it's a breach of fiduciary duty claim. That's the theory under it. I will tell you that it's a very, very high standard. Very unlikely you can prevail upon it unless I have the email from the president that says, I don't care what the restriction is, I'm not enforcing it. Absent that, it's pretty hard to go and prove. So there is a theory there. It is something that can be threatened against the board of directors, but very unlikely that you can prevail upon it.
Okay, next, Tamara asks, do you need a meeting or post that a meeting is happening to replace a board member who quit unexpectedly? Can the board replace if the docs state that the board can replace without meeting?
So yes, anytime you have board action, there's two methodologies to do it. One is at a duly noticed board meeting. So have a board meeting. That's the easiest way to go ahead and do it. Nobody can accuse you of operating behind closed doors, which I have a lot of clients run into. So I always recommend, unless it's an emergency situation that we have to make a decision today, John, do it at a duly noticed meeting, even if we have to hold a special meeting between our monthly meetings or quarterly meetings. Number two is there is a provision under Chapter 617 that allows, if every board member will sign, a unanimous written consent in lieu of a board meeting. This allows, if there's an emergency matter, a pipe burst running through a common area and it's flooding the street and we need to hire a contractor and it's $5,000. What do we do, John, right? All the board members can sign a unanimous written consent, and that is just as good as the meeting, as the action being taken at a duly noticed board meeting. I am very hesitant to have clients use that because the accusation you get is you're operating behind closed doors. So really only use it in an emergency situation. As to that specific question, you can appoint the board member under either method. I think you know that I'm going to say I would do it under the duly noticed board meeting. Typically, if there's a vacancy, it's not an emergency situation. So do it at a meeting so nobody can accuse you of wrongdoing.
Next question, clarification on emergency powers for Florida. Is there a hierarchy? Emergency orders, CDC, Department of Health, then local municipalities? Can we close down common areas based upon CDC guidelines?
So the number one, that's a constitutional question. I haven't been in a constitution class since law school, which is about 13 or 14 years ago. So thank you for bringing that up at a seminar with at least 40 people still present. I think that the statute under 723.16 says that you can rely on the guidance from emergency management officials or public health officials. So do I think there's a hierarchy? No, I don't think the statute cares. I think that if you have CDC guidance that says you should be wearing masks in indoor environments where the area has high transmissibility, which I think is all of Florida at this point in time, I think you can rely on that CDC guidance to go ahead and require masks in your clubhouse or require masks in the gym or the card room or so forth. The concern I have, and the reason I brought it up, is I'm not aware of any CDC guidance that has implemented or recommended a lockdown again, that certain facilities be shut in their entirety. And so I don't know what municipality you're coming from, but if they gave you the backing to close certain portions of your community, or the CDC said that you should not have gyms open or pool rooms or whatever it may be, if the state has something conflicting, I think you can rely on either. I think you just have something to point to. The problem I'm running into currently is a lot of clients are like, hey, we want to go back to where we were in March and April. where we had the pool open, but we didn't have the gym open because we just believe it's a risk. And the answer is that you can still do it, but understand that in March and April, I had that governmental emergency mandate in place. I no longer have that in place, so it's subject to challenge. We're still here to fight for you. Understand that. And most people won't pull the trigger and sue you at the end of the day. But it's just there's more risk associated with it as we sit here today.
Last question. A previous board destroyed documents prior to the 7-year rule. How does the current board handle a records request?
It's an excellent question, something I recently gave an opinion on for another client. So the answer is you don't have to make up records that are no longer there. But I think there is an obligation to tell the homeowner that we looked and they could not be located. That way, if they do say, well, you failed to provide a bid from 6 months ago on this particular thing, I can say, Judge, I went ahead and looked. You can ask the former board members if they have it, but we certainly don't have it. They may have destroyed it, but we're not required to go make up documents that do no longer exist. Whether that brings in issues of failure of the association to comply and open up other causes of action outside of official records requests, potentially, but that's beyond the scope of the question. So I think the answer is you look, you report back the efforts made in writing to them, and explain why you can't locate them to the best of your ability.
Very good. And Terry says, thank you, John and Vesta. Very informative info and a great presentation. And I will echo Terry's comments. Great job, John. Thank you so much.
All right. Thank you, everybody.
And we will be sending out John's PowerPoint next week, along with a recording of today's webinar. So thank you all for attending. Brenda, if you want to say some closing words, I'll leave it with you and John now.
Thank you, John, so much for hosting this with us. It was very informative, well presented, and I really appreciate you being here with us today.
No problem. I appreciate the time again. It's always good to have an opportunity to get in front of some new face. So thank you.
Thank you very much. Everybody have a great day.
Thank you.